The world was taken by surprise this week. Mexico announced it was pulling out of a big trade agreement with China. News outlets everywhere rushed to cover the story. Some called it a bold move, others said it was risky. The headlines were fast and dramatic. People in both countries woke up to a major shift. Business leaders scrambled to understand what it meant. Politicians started making statements. Social media was full of questions and opinions. The global markets reacted quickly too. This decision didn't just affect Mexico or China. It sent shockwaves through the entire world of international trade. Many experts wondered if this was just the start of bigger changes to come. Now, everyone is asking, why did Mexico do it? And what will China do next? The agreement between China and Mexico was a major one, representing years of careful negotiation and high hopes on both sides. It wasn't just another trade deal. It was seen as a turning point that could reshape the economic relationship between two of the world's most dynamic economies. At its core, the agreement aimed to lower taxes and tariffs on goods traded between the two countries, making it easier and cheaper for businesses to import and export products. This would have opened up new markets and opportunities for countless companies. Beyond trade, the deal promised increased investment and deeper cooperation in technology, infrastructure, and innovation. Both governments hoped this would spark new partnerships in fields like renewable energy, telecommunications, and advanced manufacturing. Many people believed the agreement would create thousands of new jobs and give a much-needed boost to the economies of both nations. For workers and entrepreneurs, it represented a chance for growth and prosperity. For Mexico, the deal was a golden opportunity to sell more products to China, one of the world's largest consumer markets. Mexican exporters were eager to expand their reach and increase their profits. Mexican farmers, in particular, stood to benefit. They could have shipped more avocados, beef, and other agricultural products, helping rural communities thrive and supporting local economies. Factories across Mexico might have ramped up production, exporting more cars, electronics, and machinery to meet growing demand in China. This could have led to more hiring and higher wages for Mexican workers. The Mexican government hoped these new opportunities would drive national economic growth, reduce unemployment, and strengthen the country's position in the global market. For China, Mexico was more than just a trading partner. It was a strategic gateway to the Americas. By deepening ties with Mexico, China could access new markets throughout North and South America. The agreement would have allowed Chinese companies to invest more freely in Mexico, building factories, forming joint ventures, and creating new technology hubs that could serve the entire region. These investments could have transformed local communities, bringing new infrastructure, better roads, and cutting-edge technology to areas that needed them most. For China, the deal was also a way to showcase its growing strength and influence in global trade, sending a message to the world about its commitment to international partnerships. But now, with the agreement suddenly off the table, all these plans and ambitions have been thrown into doubt. Both countries must go back to the drawing board, rethinking their strategies and searching for new ways to move forward. The hopes, promises, and potential benefits tied to the deal are now uncertain, leaving businesses, workers, and governments on both sides facing an unpredictable future. Mexico's decision to reverse course didn't happen overnight. In fact, there were several warning signs leading up to this moment, and if you look closely, the clues were there all along. From the very beginning, some politicians and influential business leaders in Mexico expressed doubts about the proposed deal. They questioned whether it would truly benefit the country in the long run, or if it might actually put Mexico at a disadvantage. Their main concern was that the agreement seemed to favor China too heavily. They worried that Mexico might end up giving away too much, while not getting enough in return. Another major issue was the fear of losing local jobs. Many people worried that foreign companies, especially from China, could take over industries that Mexicans rely on for employment, leading to factory closures and rising unemployment. On top of that, Mexico faced significant pressure from its other trade partners, who were watching these negotiations very closely. The United States, for example, remains Mexico's largest trading partner by far. The economic ties between the two countries are deep and complex, and any major shift could have serious consequences. Some American officials openly warned that a deal with China could strain the close relationship between the US and Mexico, potentially putting existing agreements and cooperation at risk. Many economic experts believe that this external pressure played a significant role in Mexico's final decision. But it wasn't just about politics. Public opinion was also a powerful force. Across the country, ordinary Mexicans voiced concerns about cheap Chinese goods flooding local markets. They worried these imports would undercut local businesses and make it harder for Mexican products to compete. Small business owners, in particular, feared they wouldn't be able to survive if faced with a sudden surge of low-cost imports. Many felt their livelihoods were at stake. In recent weeks, these concerns boiled over into the streets. Protests grew louder and more frequent as people demanded action from their leaders. Demonstrators called for stronger protections for local industries and workers, urging the government to put Mexican interests first. Ultimately, after weighing all these factors, the economic risks, the political pressure, and the voice of the people, the Mexican government decided that moving forward with the deal was simply too risky. In the end, they chose to back out before the agreement could take effect, hoping to protect Mexico's economy and maintain stability for the future. China's leaders moved quickly to address the news. At first, Beijing released a calm and measured statement. They said they regretted Mexico's decision, but promised to keep working with the country. Chinese officials insisted they still wanted strong ties with Mexico. Behind closed doors, however, there were signs of concern. Some experts say Chinese leaders did not expect Mexico to walk away. State-run media tried to play down the story, focusing instead on China's other trade successes. China's foreign ministry called for dialogue and understanding. They asked Mexico to reconsider in the future. At the same time, they warned that pulling out could hurt Mexico's reputation with other countries. It quickly became clear that Beijing was disappointed. But they also wanted to show the world that China remains a steady and open trading partner. Away from official statements, talk in both countries was, pretty lively. In China, some business owners expressed surprise and frustration. They had already started planning investments in Mexico. Now, many said they did not know what would happen to their projects. Chinese social media was full of heated debates. Some users blamed Mexican politicians for being unreliable, while others said China should focus on deals with other countries. A few even joked about finding the next Mexico. In Mexico, reactions were mixed. Some people cheered the government's move, feeling it was a victory for local businesses. Others worried about missed opportunities, especially for young workers hoping for new jobs. Both nations saw a sudden surge in interest in global trade topics. Ordinary people were having conversations about trade like never before. In Mexico, leaders explained their decision in simple terms. President López Obrador said protecting local jobs came first. He promised new plans to support Mexican companies. Many lawmakers backed him, saying it was the right call. But not everyone agreed. Some business groups warned that Mexico could lose out on billions of dollars. Young professionals who studied Chinese or planned to work in new factories felt uncertain. Some universities had even started programs for students to learn about China. Now, they did not know if those plans would continue. Farmers and small shop owners were among the happiest. They believed the country was safer from unfair competition. Still, some wondered if prices would rise without cheaper goods from China. Overall, the mood in Mexico was mixed. Relief and regret were both present in equal measure. Mexico's decision could have effects far beyond its borders. This move is not just a local issue. It sends ripples throughout the entire global economy, influencing how countries interact and do business with each other. Other countries are watching closely, analyzing every detail, and considering how it might impact their own trade relationships and economic strategies. Some may become more careful when signing deals with China, rethinking their own agreements and weighing the risks of future partnerships. Others might see a chance to step in and trade more with either Mexico or China, hoping to fill any gaps left by shifting alliances and changing policies. Experts say this could slow down some international projects, especially those that rely on smooth cooperation between multiple countries. Delays and uncertainty could become more common. Companies that plan to use Mexico as a base for reaching the United States and Latin America might look elsewhere, searching for more stable or predictable environments for their investments. Chinese firms may invest more in other countries, like Brazil or Argentina, as they look for new partners and markets to expand their global reach. The United States is likely to benefit, at least in the short term. American companies could see increased demand for their products and services as trade patterns shift. U.S. companies that compete with Chinese firms might see new opportunities, gaining a stronger foothold in markets where Chinese influence is reduced. Trade between Mexico and the U.S. could even grow stronger, as both countries look to deepen their economic ties and support each other in a changing global landscape. But there is also a risk. Increased uncertainty can make businesses nervous, leading to hesitation and reduced investment. If more countries back out of deals, global trade could become less stable, with unpredictable consequences for supply chains and economic growth. This could mean higher prices and fewer choices for everyone. Everyday consumers might feel the impact most, as goods become more expensive and harder to find, reminding us how interconnected the world's economies truly are. This crisis is a test for China and Mexico's relationship. Both nations have a long history of working together. They have exchanged goods, culture, and ideas for decades. But this decision puts new strain on those ties. Diplomats on both sides will need to work hard. They must keep talks open and look for new areas to cooperate. There is still hope for future agreements, but trust will take time to rebuild. Some experts warn that both countries could turn inward, focusing only on their own economies. Others say this might push them to find new, creative ways to work together. Whatever happens next, it's clear that strong diplomacy will be more important than ever. So, what should we expect now? Mexico will likely focus on its other trade partners, especially the United States and Europe. The government may also invest more in local industries. There could be new programs to help businesses grow without outside help. China, for its part, will keep looking for new markets. Other countries in Latin America and Africa may become its next big trading partners. Beijing will want to show the world that it can handle setbacks and keep moving forward. The world of global trade is always changing. Mexico's decision is a reminder that every country must balance risks and rewards. Some experts think we might see more countries rethink their deals in the future. In the end, both China and Mexico face new challenges and new chances to grow. Only time will tell what happens next.